Hey friends, it's Ernie from the Trader of Futures. How you doing? Sorry I'm about a minute late. Hopefully you're all still hanging on there, watching the show. It is now 1 o'clock on Thursday afternoon, August 9th. Can't believe that we're already 9 days into August. Time goes by so fast as you get older. Faster and faster. Seems to never stop. Of course, you can't stop time. Can you, dude?
In God's holy name are you blathering about? I'll tell you what I'm blathering about. I've got information, man. It is come to light.
That's right. New shit is the light. I don't know if you heard that. I'll have to check that. I've got the soundboard app, and I've got a bunch of cool little clips that I'll be adding here and there. Like,
fact check false.
Hopefully you heard that. But anyways, today's episode is about intrinsic value. I mean, I hear a lot of people asking whether or not Bitcoin has any intrinsic value. And then the big argument is that, well, really nothing has intrinsic value. That's all kind of this sort of made up thing, that it's in our head, that intrinsic value is only what people think it is. And, you know, from a philosophical point of view, that is probably true, that intrinsic value is really nothing more than what we believe it is, right? But in other type of things, you know, other financial constructs, like when you're evaluating a stock, intrinsic value has a very specific meaning within a company. You know, how do you evaluate a company's intrinsic value? And its value really is a function of its cash flow, or more specifically, its risk-free cash flow. And from a financial point of view, that is how you actually evaluate a company. Each company is valued based on how much cash it can generate. Now, a company could actually have negative cash flow and therefore have negative intrinsic value. Now, of course, you know, how do you assign negative intrinsic value to some other thing that may not be valued in the same way? So when we talk about intrinsic value with Bitcoin, it's obvious that we can't talk about it in terms of how we would use it for stocks or for a company, because Bitcoin nor gold or any other kind of commodity actually produces any cash flow. It has, so therefore, from that traditional sense, from the stock picking sense, from the stock fundamental analysis sense, it has no intrinsic value. It is incongruent. It is orthogonal to the whole concept. However, intrinsic value from a philosophical sense, you can't just say that, well, just because everybody has their own idea of what intrinsic value is, therefore it must be completely subjective. Therefore, there is no way to measure it. You know, I'd have to say that for the most part, I think, excuse me. People in general, they operate on a certain set of standards, you know, these kind of universal standards that I think that we all have. I mean, we all know that killing is wrong. Preserving life has got to be right, unless that life may end up killing other people. Good health has certainly some kind of intrinsic value to that. Having good morals, there's got to be some good that, I mean, anything, I guess you could say that anything good would attribute to more positive intrinsic value, while anything bad would be attributed to more negative intrinsic value. So some people might say that the intrinsic value, the actual underlying value of Bitcoin, isn't necessarily the thing itself, Bitcoin, because it's nothing more than ones and zeros, some sort of cryptographic number. So how can it actually have value? And it is like a proxy used as a proxy to other types of value. For most people, that value that they assign is the value of whatever fiat dollar that you're pairing the Bitcoin with. Some people will insist that Bitcoin has its own standard of value called Satoshi, but no one really understands what a Satoshi is and how to give it some kind of normalized value. Doesn't really make any sense. So how do you attribute intrinsic value to Bitcoin? What is its actual value? Is there a value in the network? So as the Bitcoin network, the ecosystem starts getting bigger and bigger and bigger, there are a lot of things that are associated with that ecosystem. There are companies, there are people, there are networks, there are mechanisms that go in place. There are payment processors, there are merchants, there are exchanges. You could go on and on and on about this network that builds. And I guess if you were to total up all the different aspects of that in terms of the property that they take up, the computing systems, the human resources that are attributed to that, all of that, I guess, could produce some kind of cash flow. And maybe that's how you attribute the, what kind of business does Bitcoin actually generate? There are miners. They also are mining or producing or creating Bitcoin just by being involved in the consensus algorithm. And so they're creating some kind of cash flow actually in terms of Bitcoin. But if Bitcoin is then valued in some kind of fiat, then is it actually generating cash? So, or do we kind of step back from all of that and just say that, Bitcoin is just this kind of a proxy thing that we attribute value to it, that it has no more value than people are willing to pay for it? What do you think? All right, let's see. Some people, they haven't even, I don't think they've really gotten in tune yet with the concept yet, but I'll read some of these comments anyways. We have Lego Wifey. Lego is a regular now. Hello, Ernie. First, thank you for your time, effort, and refusal to give up or give in. Yeah, that's true. Well, quite frankly, I have no choice. I can't just, throw the towel in and say, up, I'm all done. Take my house, take my living, take everything from me. That's fine. I'm good with that. I think I'll go live on the street. Maybe I'll move to San Francisco. They seem to welcome street dwellers there, although I'm not too partial about shitting on the sidewalk. And it does smell there. Running my own web-based selling business, I've had problems with eBay, PayPal, getting locked out of emails. So I kind of feel you. I never been hacked though. As Rocky said, it's not now how many, it's not how many times you've been knocked down. It's how many times you get back up. So don't stay down. Dare I ask, you have any idea who it was? No, I don't. I don't have any idea who hacked me, who stole my identity, who essentially ruined my business, reset me to zero. I really don't know. And I may find out someday. And, if I take this further and perhaps pursue some legal action against that person, I'm hoping that I can get a settlement from AT&T, and that will be it with them. And I'll be happy with that. I will thank my lucky stars bringing this to some kind of legal action and suing. That would result in, I think, more pain than it's worth. So really the only answer there, just to answer your question. Hold on 1 second. Hey, Mr. Man, I am actually giving my my daily Bitcoin Live and Let Die show right now. Well, I haven't even thought about guests, so it's nothing against you, that's for sure. But yeah, the first opportunity, whenever you'd like. I, I, no. Wait a minute. So, would you like to come on to this show? Well, today I'm talking about intrinsic value. Really, the only way that you're going to call in is I'd have to share a link with you. And no. I'd love to have you on. I think people would love to hear from you. Well, see, let's see. You have access to Skype, right? I'm going to send you the link on Skype, and then you can use your computer to actually log into Hangouts. All right, man. Bye. Okay, so that's a surprise guest that's coming on, and we'll discuss intrinsic value together, I guess. So that'll be cool. I'm not going to announce who it's going to be. Some of you will know this person. Many of you may know this person. Some of you will not. And I think you're in for a treat. He's a good guy. All right, let's see here. Ernie, you closed your shorts yesterday? Yeah, I closed my shorts. Had to get out of that trade. It was a good trade, actually. All those people that thought I got wrecked obviously weren't following the whole philosophy behind that trade and the execution of it. Marv, how you doing? And Trojan Hell, Ernie, what do you think about today's news by CNBC that the game's over for Bitcoin? That's hard to believe that they would ever say anything like that. Who is the guest that claims the game is over? News Unit also pronounced that CNBC announces game over for Bitcoin now after they were pumping it for about a year. Yeah, you've got to expect that these guys, they had to be shilling for somebody. There's just too much money in this game that they were just, because it's not really a news story that's going to attract a lot of people to watching their program. Most people don't give a darn about Bitcoin, except for a very select group of people. I mean, that's it. So why were they shilling Bitcoin? Steve King says, most stocks in Bitcoin are just like trading baseball cards. It's nothing more than hoping someone will pay you more than you paid. So yeah, well, that's been the general consensus about, you know, how do you value Bitcoin, or how do you value any of these cryptos? It is you know, whatever the next guy is willing to pay, and the expectation is that when you buy it, you put down your dollar, that that it's going to be worth something more tomorrow. There's going to be a mass exodus now from all the cryptocurrencies. Yep, sell Bitcoin. Well, you know, there was a big pump this morning. It got pumped about up to 250 points, $250. I mean, that wasn't really a significant pump, but it was still a pump, and it happened as it was just dropping below 6,100, I believe. And that must have got somebody nervous, because it obviously wasn't like this sort of mass psychosis where all the retail traders in Bitcoin decided, yep, there's the value point, let's push that buy button. That didn't happen. This was a coordinated or individual effort by a whale. Had to push that button, pumped it up a little bit, you know, and I kind of expect that, at least down here, now that we're below the neckline, that we're going to start seeing some kind of consolidation. Now, will that consolidation break above the neckline, or will it, you know, the neckline of the old head and shoulders, the inverse head and shoulders, and will it just break down from there? I mean, the odds are that it will break down, because it will then form a nice bear flag. So CNBC no longer pumps Coinbase and BTC. Yeah, I didn't see that show. I didn't see that today. So Bo says they want to buy lower. Of course they do. You know, and that's why institutions haven't gotten involved. Well, there are two reasons why institutions haven't gotten involved. They in no way are going to overpay for Bitcoin and buy in at this level. And secondly, and more importantly, they're not going to buy in when there's so much uncertainty from a regulatory front. They will not buy until there's some sort of regulatory certainty. And of course, it's kind of a catch-22 because the SEC is not going to induce regulation until they feel there's some stability in Bitcoin, and institutional buyers or investors would, I think, provide that kind of stability, due to their discipline and their investment objectives. So it's kind of a catch-22. Institutions ain't going in until there's regulation, and regulatory agencies aren't going to make regulation until it's more stable. Can someone confirm CNBC has said this? And all eyes on me, they're already in. No, they're not. Sorry to burst your bubble, but there may be some institutional players that are in there, but they're not in there in a big way. And as a general rule, institutions have not entered this market at all. I know it for a fact, so I'm not fooling myself. Chuck A says, until there's a real use case, any crypto with a market cap over $1 billion is overvalued. That I would definitely agree with. As a matter of fact, I valued the entire cryptoverse, the entire crypto market. I value it at something like something less than 25 billion. That's my estimation right now. Yeah, so all eyes, I agree that there are some on a very limited minor scale, but these are not the people that are also simultaneously investing in funds or managing their clients' money. These are people that are taking personal minority positions. And Scott Doyle, crypto FUD is a lot like political FUD. During an election, insanely biased articles steering the herd. Yep. All right, guys. So we have a guest on right now. This is Scruff McDudington, also known as Don.
What's going on, Ernie?
How you doing, Don, man?
Well, pretty good, dude. I had good news from my doctor yesterday. And anytime you're over 50 and you get good news from your doctor, it makes funny story. I was in a meeting this morning, and in the middle of the meeting, I saw it was a phone call from the hospital, and it was a nurse that I had seen yesterday. And you're always thinking, oh, what's this all about? And they were just doing a little courtesy check to see how I was feeling today. So
that's good. And what's the news? You're cutting out, Don.
You're cutting out on my end.
You know what? I'm going to there. I turned off my fan. I don't know if that's helping at all.
You sound good. So what are y'all talking about? Is it Bitcoins again?
Well, today's topic is intrinsic value. So I brought in the concept of intrinsic value and stock valuation, which is essentially the calculation for cash flow and the risk-free cash flow. But that doesn't apply in Bitcoin or gold or silver or any other type of commodity or life. What is the intrinsic value of a job or good health or Bitcoin? That is more of a philosophical question, I think. I don't know if it can actually be quantified. What do you think?
Well, I mean, there is no intrinsic value in Bitcoin. I mean, it's the opposite of intrinsic value. It's all a value that two parties ascribe to it between each other. So there's literally nothing there.
So you're saying it's completely subjective, that the network, the ecosystem, all the people that are behind it, the Lightning Network, the payment processors, the exchanges, the miners that have bought all this equipment and everything, they don't necessarily generate any value.
Well, the printing presses that print the US dollar have some value, right? The ink they use and the paper they print on and all the folks sitting around wringing their hands trying to figure out how many of those things are going to print. There's all, quote, value there, but that's not what gives the dollar value. What gives the dollar value is whether you accept it or I accept it. It's the same thing with Bitcoin. There's nothing there outside of what you and I decide there is.
Sure. Well, some people would say that the value in the U.S. dollar is actually the might of the U.S. government. They're both their military force and their economic force. We look at the dollar and say, well, the value of the dollar is the debt or the promise to pay the debt, and their the certainty that they've proven to everybody that they will continue paying that debt. Maybe someday they won't, and maybe the amount that they'll pay on that debt is going to obviously fluctuate a lot and kind of long term kind of screw us. but there is at least some value. I mean, I can take a dollar and I can exchange it for something with fair reliability. At least in the near term. In the long term, that's another story.
Well, you can take Beanie Babies, and if you can find someone willing to exchange you something for Beanie Babies, they've got a value too. I'm just saying that with Bitcoins, there is no intrinsic value in the thing itself. If you want to say that the network has value, we can talk about that. If you want to say that there's a utility in being able to transfer what you call value across borders without going through the normal channels, I mean, there's value to that too. But the thing that you're exchanging itself does not have intrinsic value. That's all I'm saying.
So Lego Wifey is saying this is why we need a wipeout of the altcoins. All this will clarify, simplify people's sight to find an intrinsic use and therefore intrinsic value. Is this correct? Goes on to say, what a ridiculous view. Oh, no, this is, I'm sorry, this is all eyes on me. And now is replying to Lego Wifey. Now, I don't know if he's replying to Lego or me. What a ridiculous view. No intrinsic value? Okay, this guy is obviously a Bitcoin maximalist or of some sort, to some degree. It gives people control of their own finances with code to back up the algorithms. Come on, no intrinsic value? What a joke.
I mean, look, again, I don't know if I'm being clear enough. The thing itself does not have intrinsic value. What you do with the thing is a subjective. It's a concept. It's a philosophic precept. If you want to say that you've got control over your finances, then I would ask you this. When you see Bitcoins get hammered from 9,000 down to 6,000, are you telling me that that's not the big whales and the bankers pushing it down?
Yeah, I believe that. I just want to say, he was replying to you, to the guest, to you, Don.
Right, I understand.
Yeah, but I want to also, second your opinion. From a philosophical point of view, I don't believe that Bitcoin has any real value. There is nothing behind it. The only value ascribed to it is what someone else is willing to pay for it tomorrow, which could, in fact, be zero.
Well, I mean, look, what I'm saying is for people who argue that there's a value in Bitcoin because of the utilitarian nature of it, I would say then divorce yourself from the dollar value attached to it. It is with dollar value that we can measure intrinsic value. And if you're going to attach a dollar value, then you have to explain how something that allows you to control your finances is so easily. When you realize that the day that Bitcoins hit the high last year, and I think, Ernie, you pointed this out to me in the conversation that you and I had the other day, Bitcoin hit the high the day the bankers came out with their futures product, and it got crushed ever since. And you can't tell me that's because everyone's out there using it to buy things at Amazon and people are trading it across the fence to buy Birkenstocks and yak wool sweaters. It is because it is like every other money, quote money, it is controlled by forces outside of your control.
Right. So I would ascribe value to something that I would have some, I guess, relative certainty that it's going to maintain its value, or it's going to have some kind of baseline, or I'm going to be able to trust it that that it will be there. But what you're saying though is that, man, tomorrow it might not be there. So how is that valuable to me? In fact, that risk actually tells me that maybe there's some negative value to it. I mean, it might be there, it might not. How can I, if I'm going to say sell my house tomorrow in Bitcoin, and then Bitcoin loses 80% of its value, man, I've been screwed.
Well, but Bitcoin doesn't ever lose value because Bitcoin does not have value. And if you don't mind, let me prove that. I know you and I have talked about that, but let me prove that. If you have a Bitcoin, or what is the digital equivalent, I'm going to tell you what's at 6,500 right now or whatever. So I go, okay, I'm going to give you 6,500 dollars for control of that number, that set of numbers. Now, when I do that, if we value Bitcoins in dollars, the moment I give you the dollars, who has the value? If it's valued in dollars and I gave you 6,500 in dollars, who now has the intrinsic value? Is it me holding the Bitcoin, or is it you with what we are valuing it in? Who has the value?
Well, the person who has the fiat is really the only person that's going to be able to then use it in a more regular fashion. I mean, it can still be argued whether or not even the fiat dollars have some intrinsic value, but you could certainly exchange it for something of value, or buy into a business, or buy a house, or buy some property that's going to produce income. And I guess to a certain extent, you could do that with Bitcoin, but the opportunity would be infinitesimal compared to, say, a fiat dollar.
Well, I mean, when you say that the fiat dollars don't have intrinsic value either, and we can debate that, I agree with that. In fact, I think that the fiat money system that we have is a failed, flawed system for a number of reasons, not least of which is that interest rates are arbitrarily moved up and moved down by people that we have zero elective control over. So the dollar system is clearly flawed. But to argue that Bitcoins are somehow have more it's not the case. As long as you're valuing Bitcoins in another currency, then there goes your intrinsic value the moment I hand you the thing we say gives it its value. Now, someone mentioned here that your guest should be pro-Bitcoin. I'm not pro-Bitcoin or anti-Bitcoin. I'm just talking about the philosophic precept of valuing it in terms of an intrinsic value. That's all I'm saying. If you, hey, listen, if people want to buy and sell Bitcoin, let them do it, man. And you know, I have no problem with that. If the entire country wanted to use Bitcoins and call it money, and say every transaction had to be done in Bitcoin, so be it. That's not my argument here. I'm just arguing that to say that Bitcoins have an intrinsic value, that's not accurate. And let me prove one more point to you. If right now every person holding a Bitcoin said, okay, I want to get my money out of it, but they could not find a counterparty on the other side, there's nothing you could do with those Bitcoins. You couldn't use them as a paperweight if you tried. I'm just suggesting that the value in Bitcoin is that you always find someone to give you something else in exchange for it, which is true of all money systems.
Yeah, and you know, if you were to go back to the traditional way that value or intrinsic value is calculated, say for stocks, it's usually a function of, well, it is always a function of cash flow, or the risk-free cash flow. And so what that is kind of alluding to is your ability to create enough cash that then can be translated into other things, you know. So as long as you're producing some income or some medium that you can then continue to purchase things, or continue to engage services, or buy homes, or you know. So in other words, it has to be something that's continually producing something. Without the ability to produce, or to be able to exchange it for something to produce, it has little value. Now, at any one time, you might be able to do that, but in of itself, it doesn't necessarily have that ability to produce. So, for instance, some people always also talk about the store of value, you know, and you look at gold and they say, hey, gold is a great store of value because, you know, if you had an ounce of gold back in 1910, it could buy a man's suit, a good man's suit. And that same ounce of gold today can buy that same exact man's suit. So from a store of value, or retaining its value, or its ability to be able to then transfer it into something else that is of use to you, it has retained that power, that level of power.
Okay. Well, so one of your the folks in chat said something. Alex L said something that I want to address. I think Alex L makes a very good point. Alex L says, "Guest, I disagree. Currently, Bitcoin is denominated in US dollars because it is not the dominant currency." Let me just stop right there. I've said for a long time, as long as you are going to value Bitcoins in US dollars, the conversation is moot as to whether or not Bitcoin has the value. Let me know the day we're now valuing the US dollar in Bitcoins. At that moment, the paradigm will shift. We're not there yet. I'm just saying we're not there yet. At the moment, it's all speculation. And also, again, if I give you $1,000 for a Bitcoin, or 6,000 or whatever, 6,500 right now, if you're telling me we're valuing it in dollars, and I give you 6,500 and I get the number, well, you've got the value. Now I got to go out there and find someone to give me more of those dollars than I gave to you in exchange. Now, if I don't, then I've lost value, and certainly whatever intrinsic value there was in the thing itself, I've given up. That's all I'm saying. And if you tell me that tomorrow U.S. dollars are valued in Bitcoins, and that's what we're paying our mortgages with, then so be it. But we're not there yet. So I think the viewer is exactly right. Currently, Bitcoin is denominated because it's not the dominant currency. If it ever becomes a dominant currency, then the paradigm will shift.
Right, and then we'll all be thinking in terms of Bitcoin, but we're not. Right. So as long as you live in the United States, or as long as you're on the world stage and you deal with the U.S. dollar as being the reserve currency, you value everything in dollars. In fact, you can watch, a UK programmer or programming, or even any other programming around the world. And when they talk about from a financial sense, they're always talking in terms of U.S. dollars. They don't talk about their specific dollar. And that's because that is the one thing that everyone can agree upon, where what kind of exchange of value that it might have. If you're in a particular country and that's the only denominated thing that you use, whatever that type of money is, then that's what you're going to put your value in terms of. Right?
Yeah. So earlier, someone made the comment that, let me scroll back up here. They say, Maximus K says, fiat does not have any intrinsic value either. What does actually have intrinsic value out there? That's another great point. It's all you and I, except in situations like this. If I say to you that I'm going to give you a bushel of wheat for the chicken that you're holding, we could trade bushels of wheat for chickens, and they could simply be mediums of exchange in that way. But at the end of the day, the intrinsic value of the wheat, it can be turned into bread. The chicken can give me eggs. There are things out there that have intrinsic value. Water is something else that's got intrinsic value. You can trade water. You can trade gasoline. You can trade firewood. You can trade silver and gold and things like that with industrial uses. Those have intrinsic value.
Well, I would even go a little further than that. I would say that, like I said before, there is a well-established standard for intrinsic value when it comes to evaluating a company, for instance. All right. And that is strictly about how much cash flow it can generate and how much purchasing power that it has. But then there's the sort of more philosophical thing, because we can't tie everything else down to cash flow. You can't tie down water to cash flow, but it does provide a certain amount of value. It provides basically life. It provides the ability to be able to grow crops, etc. And, just like you can say that, somebody's goodwill or somebody that has good health, there's intrinsic value in that, because as long as their health is good, they can provide for themselves and their family, or run a country, or whatever. So there's the philosophical side, and then there's the more, the utilitarian side of what something can actually provide.
Yeah, I mean, and I'm super libertarian about this Bitcoin thing. If you tell me that you want to use something called a Bitcoin, a cat coin, a bat coin, I don't care what you call it, and someone else wants to accept it as a transfer of value in any way, I wouldn't stand between you and someone else making that transaction. I'd say go for it. If that's what you want to do, go for it. And if that's what everyone in my community decides is going to be based, it's going to be money, then okay, so be it. If I don't like it, I'll move, or I'll vote against it if I have a chance, or whatever. I am very, very open to people using it in any way they want to. I'm just saying that they're not, they don't have an intrinsic value outside of what you and I subjectively think they do. And that is, by the way, the same with the U.S. dollar. I agree with that. The difference in the U.S. dollar, as you pointed out earlier, is it is backed by the military of the U.S., which I would argue is a little bit more mighty and powerful than what's backing Bitcoin right now.
Yeah. So Crypto Bacon says, you guys should read the Bitcoin Standard. It argues that the decentralized alternative to central banking, and how Bitcoin could be the base asset for the system. Now, see, you're projecting now. You're saying it could be, it might be. Now,
I want to say something here. I apologize. I don't want to cut you off, but we're talking about something here that 7 or 8 years ago, no one even knew existed. And we are now having conversations openly about something where we don't even know who created it or why they created it. We can sit around and talk about who we think did it and who might have done it and it was some guy or some group of really honest, genuinely libertarian leaning programmers, or it could have been JP Morgan, it could have been Morgan Stanley, it could have been Blythe Masters. I mean, it could have been a whole lot of folks, and we're having conversations about something which in another universe we would have thought was preposterous to have a conversation about. It's literally as it just dropped out of the sky, and people are talking about this like it's something that we should give a lot of serious thought to, but they're not giving serious thought to who's behind it and what was the actual reason for creation. I just think people should keep that in mind, because bankers love Bitcoins. You've got Lusters, and look at her involvement with Bitcoin and cryptocurrency for the last 5 or 6 years. Look at Vikram Pandit. Look at Lawrence Summers, former Treasury Secretary of the United States of America, on the board and probably on more than one Bitcoin company. So this idea that Bitcoins are changing the banking paradigm, the bankers love Bitcoin. They love the idea of digital money. In fact, 6,000 years ago, people liked the idea of gold and silver. Gold and silver went to paper notes. Paper notes went to checks. Checks became credit cards. Credit cards and debit cards have now been replaced with PayPal. And the next evolution in digital money is Bitcoin. Milton Friedman talked about something like this 20 years ago. And this is not something bankers are against. So when I read these comments about people saying that Bitcoins are really changing the paradigm, they are an evolution of what was always going to come. That's all I'm saying.
Well, I would say that bankers would love it as long as they can control it. If they can't control it, if it usurps their utility, then obviously they're not going to love it. But I think they love it because they know that they can control it, or they could gain control of it. So, for instance, if the bankers wanted to, I suppose they could all get together and they could buy up Bitcoin, right?
Absolutely. Well, and that's, I mean, man, you make a great point there. You could go, if you were a big bank, you could go on the ask on the bid on every exchange out there and just soak up whatever Bitcoins people would sell to you and keep going and going and going and literally own every Bitcoin in existence, every one of them, and never run out of money with which to buy them. And that's not a positive. That's not a good thing for the little guy. You need something that the bankers cannot control that way.
Yeah, and I'm not sure how you do that. I'm not sure how you marginalize the bankers.
Well, you certainly don't marginalize the bankers with Bitcoin. I don't know what the answer is, but Bitcoin hasn't solved that problem. I mean, and where you read about the bankers now manipulating Bitcoins by doing exactly what you talked about, and furthermore, we have no way of knowing. You know, at least in the capital markets, you can sort of track down who it is that's buying and selling. Well, dark pools of liquidity aside, with Bitcoins, that's one of the, quote, beauties of Bitcoin. You don't really know. Well, if you don't really know, and a banker knows that you don't really know, and they know they've got more money than you do and more access to server farms than you and I do, then they're always going to have the advantage with something like Bitcoin.
So Bitcoin originally was thought to be some kind of payment medium, that it could be used for payments from party to party with very little friction, almost instantly, with very little cost. And that has actually proven to be not true. The functionality, the technology simply doesn't allow for it. It's a clunky mechanism. So they've developed these sort of secondary networks like Lightning. And Lightning essentially is this sort of other decentralized network that sits next to Bitcoin. And then as it develops or can do transactions very quickly, it then accumulates all of these transactions and then puts them into a Bitcoin block, right? Now, the problem with Lightning is that the way it works is that it requires that in order to be able to transfer value from person to person, you need to be able to put certain amount of money into escrow. And that amount of money allows you to make these hops transparently from one person to the other. The problem is once the network gets really, really big, the amount of escrow that you need in order to make efficient hops, say across maybe 1 million or 10 million people, starts getting so exponentially huge that the only way that you could actually provide a particular node on the Lightning network that could hook you up with another person efficiently is if that person had tremendous amounts of equity. money in escrow or Bitcoin in escrow in their node on the Lightning Network. Now, what essentially that means, what I call these are liquidity nodes, and if you think about it, a liquidity node is no different from a bank. So what they're really proposing now is that we take banks and put them on this Lightning Network, create these huge liquidity nodes so other people can then transact through these big liquidity hubs, so that they can now effectively transfer from one person to another and overcome the limitations of Bitcoin. Now, the problem, though, now is that once you get these liquidity hubs, what banks do, right?
I have to stop you. How dare you say Bitcoin's got limitations? I mean, come on, Ernie. I mean, we were told that Bitcoins were the answer to all of our problems. They were money for the little guy. Bankers couldn't control it. They were super anonymous, could never be taxed. And I mean, they were going to overtake the dollar in 5 years. I mean, seriously, to say that Bitcoins have problems, no. That can't.
Well, you know, that's the thing. And a lot of the core developers that are on Bitcoin are actually, paid by a certain company. Now, this certain company is also the company that is sort of financing the development of the Lightning Network. And they're also selling these liquidity hub spots to big financial concerns so that they can then make the Lightning Network go. So essentially what they're doing is they're bringing in banks into this whole system.
Right. I mean, that's the thing. If people want to see a real wake-up call of an interview, look up Jeff Garzik, Bitcoin developer back in 2009, 10, or 11. You'll find it. He did an interview, I think, with CBS News, one of their affiliates, one of the local affiliates, where he said, look, this is 7 years ago, 8 years ZIK. He said that for Bitcoiners, and this is not me talking, this is a Bitcoin developer. In fact, he was on the board of the Bitcoin, the Bitcoin, what do they call it? The Bitcoin.
I know what you're talking about. There's some board that they have.
But Jeff Garzik said the only way these are ever going to be mainstream adopted is with the long arm of government involved. He said Ron Paul supporters won't like to hear this. Libertarians won't like it, but that's the only way. He said Bitcoins aren't anonymous, and if you think they are, you're stupid. That's what Jeff Garzik said. I didn't say it. Jeff Garzik said this.
Here's my view on it. The problem is that these Bitcoin maximalists and people that believe in this think that you need to have one governed model that goes across the entire world, basically a sort of a communistic model. And my point is that I don't believe that will ever work. You can't have one governed model. It has to be a federation of models, maybe much like the United States is, a republic of democracies, right? That's the only way it's going to work. You can't have one model that fits all. You have to have these sort of federations of governance models that are specific to cultural concerns, geographical concerns, other demographics. That one model will never fit everybody, because that's essentially saying everybody has to act the same. Everybody is under the same rules. I don't see that ever working. That is ripe for corruption.
You look at the founders were making an argument that the reason why you want a centralized money system is because without it, you have chaos. At the time, say 200 something years ago, there were hundreds of local currencies and scripts, and people were printing and minting and making. Weights and measurements were across the board, different locations, different countries, etc. What they decided was, you want to have one unit of measurement by which all others are measured. All other things are measured. Now, that's been bastardized. I mean, clearly, the Coinage Act of 1792, which set up standards on copper, silver, and gold, that's, again, been bastardized, thrown out the window. But that standard measurement is something that the founders knew was a really good idea, else you have bedlam. And so when I hear you say we need multiple systems and all that, maybe for the blockchain, for transferring information, but you need a stable currency. You don't need a currency that swings wildly up and down 10, 20, 30, 40, 50% in perceived value. The founders understood this. Now, again, so we're clear, what's happened since then has been a disaster. The 99% loss of our purchasing power with the bankers in control of the currency, clearly no good. But that doesn't mean the original intent wasn't good.
Yeah. So we have all eyes on me. You should gather from his name, he wants all eyes on him. He says he's out of here because basically a conversation between Ernie and his guest. No chat dialogue. See you next time. Come on. You know, so in other words, the only value that I have in this particular channel, this everyday thing, is if I chat with you. It doesn't make any sense. I don't get it, you know. So you bring on somebody and talk about something that I think is important, and somebody that has insight. Look, and on top of that, we're both looking at the chat and trying to answer as many questions as we can.
Well, you know, Ernie, someone mentioned something earlier in chat. Ironically, I wanted to address where they said that all that, you know, I was doing was yapping, and no solutions. I'll give you a solution. If you want a solution to how you keep bankers not involved, let's ask a central question. What do bankers want to do? Make money. How do bankers want to make their money? Through usury. Now, if something is in limited supply, something they can control the limited supply of, then that limited supply will be hoarded by bankers. They will then loan that back out to you, and they'll charge interest. Now, that can happen with Bitcoins. In fact, there are Bitcoin banks. You can lend Bitcoins all day long, and people do it every day. And in fact, the transaction fees on Bitcoin are a de facto usury on the use of Bitcoins. And mathematically speaking, you could even show that at a certain level, the amount of money transactions will take out of the system will be greater than the amount of money being transacted. And mathematically, you can solve that. So if you want to solve the banking problem and get them out, you need a money system that does not have interest attached, fee hoarded. Thus, I think people might want to consider a non-finite supply of what we call money.
Yeah, so that's the other thing that has always bothered me about Bitcoin, this idea that a finite supply is somehow good. And I understand the concept of having a something that is deflationary, that is not inflationary. That
right.
Sounds okay, but I think ultimately we'd want something that is neither inflationary or deflationary, that we would somehow want to sort of balance that edge. And so that would mean that you would need a slightly elastic money supply. I don't believe that ultimately an inelastic money supply will serve itself throughout the life of that money.
That's a very good point. And my use of terminology here in terms of, it may sound like I'm arguing for deflationary money. I don't know it has to be deflationary. And let me tell you why. Let's say the population grows at 1% a year. Well, instead of having a finite number of money available that will have to satisfy the needs of an ever-increasing population, why not increase the money supply at 1% a year? And by the way, I'm just throwing an idea out there. The money supply then could be status quo. It could be a balance. It might not get too overheated. It might not be too deflationary, but you could find a metric that would make bankers hate it. They would hate the fact they couldn't take it and screw you by charging interest on it or hoarding it. There'd be no reason to hoard it. It'd be like a spigot that was turned on. That would be possible. If you had a cryptocurrency that would do that, that was constantly dripping out more of that currency. For example, if every time you used it, it generated a little bit more for someone else. Now you have something that people are going to start spending over and over and over again. Technically speaking, I'm a moron. I don't know how to do it, but you got to get the bankers out. And the only way you do that is quit talking about Bitcoins in terms of dollars. Start talking about Bitcoins in terms of other stuff, or find a way to make Bitcoins more deflationary than inflationary.
Right. Yeah, because if there were no inflationary component, if there were no fractional system, if they weren't able to basically create money out of thin air simply by lending it out, then there would be no use for the banks, right? I mean, what would you need a bank for? You don't need them to borrow money. Well, I mean, there might be certain types of banks that have created huge pools of liquidity or reserves that you could then borrow from them, but you wouldn't be beholden to them.
But why do we need banks? I mean, this is the thing that I've always wondered. Why do you need someone else? Banks are like babysitters. Why do we need to pay somebody to hold what we worked for and earned our entity, and say, hey, listen, this is where I totally resonate with people that like the concept of Bitcoin. Why do I have to go to somebody else and say, will you hold this for me? Or can I have your permission to take out $5,000 today? Do I have to have your permission? Do you need my thumbprint or my DNA, which is coming, by the way, just to simply make a banking transaction? that is absolutely the thing I resonate with cryptocurrencies over, is that process has ruined, and I mean absolutely ruined, not just our generation, but maybe generations to come, who have been led to believe that bankers are like your babysitter or your mom or your dad. They are not. They are there to take money from you, your hard-earned money, charge interest on top of it, and find any way they can to keep scraping and scraping and scraping until you have none.
Well, it's worse than that, Don. I mean, they're actually creating money out of thin air and then borrowing and then lending it out to people and then benefiting from that money that they create out of thin air.
That's exactly right. So don't think for a second I'm like pro banker or fiat. I'm just, let's create a cryptocurrency, man, that makes bankers not want to touch it. Anything a banker doesn't want to touch, you and I should want to touch. And every time you hear bankers say they don't like silver and gold, you might want to load up on a little silver and gold. If a banker likes it, you ought to hate it. If a banker hates it, you ought to love it.
Right. Now, Trojan Hell also says, laughing out, they loan BTC. What happens if price crashes? Well, there are firms out there that do loan Bitcoin, that do loan crypto, but they are based on the idea that the only way to borrow money is that you need to have some kind of equity or collateral in order to borrow it. Where with the bank, you don't need any of that collateral. And that's really what I think is one of the driving forces for people it's obviously the only driving force where people get into debt and then get into trouble and then start creating all this debt. And then it just builds up into something that is unmanageable.
But but don't you have to take it, and maybe I'm wrong about this, but don't you philosophically have to take away the crack pipe of interest from the bankers who are trying to convince everyone that there should be interest on everything else that we do? So if you go to a bank, well, there's interest on your college, there's interest on your car. Don't we have to find some money system? I'm trying to speak to Bitcoiners out there and sort of reach across the aisle and be empathetic here, because don't we need to find a way to say, listen, guys, let's don't be like bankers. Let's don't charge transaction fees. Let's stop all of that. Let's only make it about the utility of the thing. And as long as we're talking about transaction fees and miners and banks having the ability to control markets and ETFs and futures contracts, how is this any different than our current system? It's not.
No, it isn't.
It's not the way to create a money system that gets rid of all that crap. I hate it.
Yeah. Well, it's obvious, Don, that we're not there yet. We're not any place close to having this sort of ideal system. I mean, we had something close to that in the early days of the United States when we had the greenbacks. There was no debt attached to the money. It was strictly and according to the Constitution, where Congress would actually determine what the value of that money was, and that was great. And this was during the time of Abraham Lincoln, and then of course the bankers they didn't want any part of that because they could not make anything from that. So they wanted to introduce the Federal Reserve System. Now, I'm not saying that the bankers killed Lincoln because he was opposing the Federal Reserve System, but I'm saying that I think that the bankers killed Lincoln because he didn't want the Federal Reserve System.
Okay, so one is the guest Bill Clinton. And what's funny about that is, although I've actually had dozens of people over the years say I sound like Bill Clinton. Thing is I grew up in Northwest Louisiana, and I think he grew up in Hope, Arkansas. So we're geographically, fairly similar. But no, I'm not Bill Clinton. It's just weird to me that the philosophical ideas behind Bitcoin, which seemed so noble so many years ago, we've just sort of glossed over the fact that, let me remind you, they are proposing an ETF and they have futures contracts on the thing that I should be able just to go and buy at blockchain or trade on blockchain, blockchain.info. How in the world have we come so far away? And isn't it time for a new paradigm? That's all I'm saying. I mean, go online. Anyone who disagrees with me that I don't know what I'm talking about, go to Google, search Bitcoin Love Fest Senate, and go read what the Senate, the DOJ, the SEC, all of them had to say about how the Federal Reserve, how fantastic Bitcoins were going to be, how there's all sorts of great redeeming parts about Bitcoin that could help our society. Anytime you hear all those groups in love with something, you've got to start thinking of a new paradigm. Ernie, have I lost my mind?
Well, other than the fact that so far, although they have approved of futures, they have not approved of ETFs yet, and they continually this is the SEC speaking, and I'm not so. There are some congressmen that are definitely interested in bringing in a crypto. I think the SEC, obviously, their charge is to keep stable markets and protect consumers from fraud. So while they have that charge, they have the responsibility to make sure that an ETF doesn't exist unless there is more stability in that market. But the irony is, or the dichotomy is, that until there is stability in that market, they're not going to approve an ETF. And at the same time, in order to get stability, you need institutions to get their money in it and stake in their discipline, but they're not going to get into it until they feel that there's some safety by having regulatory oversight.
But how do you get safety? The word safety is kind of a misnomer, in my opinion. With the ETF SLV, now don't laugh, Ernie, don't laugh. Supposedly, for every share of ETF, they actually own the silver that backs it. Don't laugh. I know it sounds comical, but supposedly in the COMEX, they've got a bunch of silver, backing SLV. Well, with Bitcoin, what institution is going to hold Bitcoin to back an ETF? I don't understand how that's even reasonably possible.
Yeah. And how do they protect themselves by holding that amount?
Yeah, I agree. But by the way, I want to say something about your channel. I wonder how many of your guests, your viewers, saw you say to them, Bitcoin dropped down from 9,000 down to 6,000. And you said that Bitcoin was a short on any moves up. Well, Bitcoin went back to 8,500, then came back down to 6,000. So I would say, congratulations, Ernie, because I don't know anybody else who made that kind of a call in recent memory. So I think that Bitcoin should be very thankful that they listened to you, because if they had been listening to you, they'd have more Bitcoins regardless of where they are philosophically.
All right. So I just want to make it known that I'm not paying Don for saying that.
I want to make it known. I wish you would. No, but it's true, man. I mean, you came out there and said short any rally, and you could have shorted every single day for months, and then the collapse happened, and people ought to be ringing the register. That's all I'm saying.
I also started producing videos the day before this this collapse started to happen too. So hey, I get lucky every once in a while. So anyways, Don, you know what? We're reaching the hour point of the show. And I don't like going too much over that. Then people see if it's over an hour, then they're kind of hesitant to listen to it. But I think I want to thank you very much for coming on to the show. By the way, if you're interested, some of you may not know Don, but Don is a fantastic orator, a great debater, a fantastic interviewer, and he has a channel that is by his stage name, which is Scruff McDudington. And I would recommend that you go there and listen to some of the fantastic interviews that he has there. And it's just a great channel.
Well, Ernie, that's very nice of you to say. I appreciate that. And I enjoyed coming on. I was sort of joking when you asked me to come on, but hey, I've had a good time. Everybody, no matter what you do, no matter how you do it, just use your head, y'all. Just to think like a banker and act like a loving, caring human being. Be good to people around you, but you got to remember, these bankers can't wait to skin you like a cat.
Thanks, Don. All right, guys, that's it. We'll see you tomorrow with another Live and Let Die Bitcoin broadcast. Have a good one.